Hello, everyone. It's Michael O'Kane again here with one of my favorite people, Ronnie Sterfele from Incrementum. Hello, Ronnie. How are you?
Hi, Michael. Happy New Year. Good to see you, my friend.
Happy New Year. We're here to have a chat about, obviously, gold, because that's what we do. And we're just going to have a quick look at last year, 2022, probably one of the most interesting years I've experienced, and I'm hoping I don't have another one like it. It was a busy year. Gold topped out at $2,052 and slumped down to about 1,622 in October, November. This year, we've seen it break back through $1,900, and it's currently holding it around that level. So, Ronnie, what do you think were the key influences for gold in 2022? And we've got a lot to choose from with inflation, recession, geopolitical upheavals, invasions, slumpy markets, all been in the news. And obviously, most of those are things you've discussed in previous editions of the In Gold We Trust report.
Well, it's been a tough year. And especially coming out of all this COVID craziness. We all thought, well, perhaps 2022 is gonna be slightly less turbulent, but it obviously wasn't.
No.
So now, what were the major drivers? I think people tend to forget that just 1 year ago. So if we would be sitting here January 2022, interest rates were still at 0. Now we are heading to 5% for the first quarter of this year. So we have seen a major move in interest rates. Now the question is, why did at some point central bankers realize that inflation is not transitory like they told us previously, and why it's not a hump like Christine Lagarde used to tell us. So at some point, I think in spring 2022, they realized, well, actually, we've got the invasion, we've got all the craziness in energy markets now. We are seeing still major supply disruptions, and we already saw inflation numbers picking up momentum before the invasion. So at some point they realized, well, actually, we gotta do something regarding interest rates. Now, obviously, they did quite a lot. So that was basically one of the fastest and one of the most radical interest rate hiking campaigns in history. And of course, it had major consequences for financial markets. So we saw that in global equity markets, 25 trillion basically vanished. In the world bond markets, we saw that 13 trillion were lost. So this is basically the equivalent to about 1/3 of world GDP that was disappearing from capital markets worldwide. Now, obviously, people would say, well, this is just, it's just paper wealth. It doesn't have any real life consequences. But of course it does. People do feel less rich. They change, they modify their spending behavior. So this is basically the reverse wealth effect that the Federal Reserve wants to orchestrate to come up with a mild recession. So I think that, as I've said, last year was really brutal for equity markets, for bond markets, but also for the real estate markets and other less liquid pockets of the market, like private equity, for example. But we have seen that gold actually did its job quite well, I would say.
Yeah.
I think that life is always it's always about expectations. Yeah, my wife probably didn't marry me because she thought, well, he's gonna become a Chippendale, or he's gonna become a hair model or whatever. So it's always important to challenge your expectations, to manage your expectations. And I think that actually gold held up quite okay in US dollar terms. Gold was down only slightly, like 0.3%. In Australian dollar terms, it was up 2%. I think in New Zealand dollars, it was also up slightly. In euro terms, for example, gold was up 6%. So actually, gold did its job as a portfolio hedge. I think quite okay. It stabilized the portfolio. It stabilized the losses that the traditional 60-40 portfolio has, and I think that the setup for 2023 couldn't be any better. So actually, I would say that we are probably not too far away from a major breakout.
Bullion Depository provides safe, secure, discreet storage of precious metals for sensible investors around the world. If you would like more information on gold storage or New Zealand, please go to our website nzbd.com.